Okay, so tonight we're coming like a flash. No countdown today because I think the countdown sometimes it takes a little too long. But we have a special guest tonight, and tonight we're going to be talking about taxes. Taxes, how does self-employed get a home? Because I have a lot of self-employed people that come to me to get a mortgage and they can't because they don't show enough. And they come to me and they say, "Oh my God, I make $1 million, but my net, which is what I could count, is 10,000. So unfortunately, it doesn't qualify." So without further ado, I'm going to bring in Omaida Fishman, and she is a very experienced tax CPA, tax specialist, I should say. And she's going to enlighten us, and she's going to tell us a little bit more on this substance, on this topic. Hi, Omaida. How are you?
How are you? I'm fine. How are you doing?
I'm doing great. I'm so glad that you're with us. I've been trying to get you for the longest, and I know you get busy when it's tax season. You're nowhere to be found. So I am very happy that I finally get to have you here with us. And I thank you so much for joining us.
Not a problem. It's actually a little slow and quiet now, so it's a good time.
I'm glad. I'm glad. Everybody did all their taxes and
Yeah,
business taxes and everything else. So you're good.
there's a few out there, but it is what it is.
Now the holidays get you.
Yeah, our
So
plan.
I always like to ask this question because it's good for people to know, how did you get started? What inspired you? How did you all of a sudden when you were little, you said, "I want to be a CPA," or
No.
did it just happen?
Well, I've always been savvy with numbers. I'm always been, um, I mean, a little business oriented since I was very, very young.
Mhm.
I think it started when my grandma had a store in Puerto Rico facing the schools, and I got a little bored and I started like going in and out of the stores and helping out, and eventually I ended up counting the money. I ended up selling the products. I ended up saying, okay, this is a profit. We didn't do good on this. And I think it started from there. I think it started from just understanding how business work, how to make a marginal profit, how to
Mhm.
buy and sell and count money. So
Nice.
it grew from there. And then, I did, went to school, went to college, went to high school, did very well, didn't know what to do from there. Actually, I went to business school.
Oh,
And
nice.
I did 2 years of business school. And the professor sat there and he goes, you need to be an accountant. You need to go to college. You need to further your education. And
Nice.
good advice, because one thing led to another. And I finished my undergrad at Marymount in New York
Nice.
City. And from there, I went to Ernst and Young. So got a huge, big experience with back then it was the Big Eight. So,
Nice. And you love it. Is this like your passion?
well,
This is
I was thrown into the tax department. Accounting is like a doctor. There are different types of specialties. Heart surgeons, you have the dentist, you have the chiropractor. With accounting, it's the same thing. You have tax specialists, you have government accountants, you have all kinds, you have auditors. So I was just, when I went to Ernst and Young, they threw me into tax department. And it's with taxes, it's a little bit about understanding the law at the time,
Mhm. Mhm.
and then you apply the numbers. So it's a
Mhm.
little bit different than just being an actuary where you're dealing with a lot of numbers. With taxes, it's planning, analyzing, understanding the tax law. It changes.
Oh,
So
yes, a
for
lot.
the most part, the base stays the same, but every year, depending on the new administration, there are always constant changes and constant update to the
Yeah.
laws. So, you know,
Yeah.
and we're going to get new changes coming soon. So, the last biggest change when they changed the tax forms, that was like a killer for many tax practices because, the comparison from one year to another changed.
Mm-hmm.
and just finding the form lines and understanding them. So it was a challenge, but we got over it. And
Nice.
it is
It's the same thing. Same thing happened to us. They changed our form. They made it longer and
right.
more.
Oh,
So, yeah, it messed up. And in the middle of the pandemic, mind you, you know, like we didn't need that. We had all this volume, and all of a sudden, oh, let's change the application. So
I
they
know.
know when to do it.
Yeah,
Um,
it
so
happened.
now the big question is, I know that you get a lot of self-employed
Small
clients.
businesses a lot. Yes.
How do they have to structure themselves to be able to, because if they're interested in buying a house, so this is for first time home buyers, if they're self-employed and they're interested in buying a house, how do they get structured?
Well, it's all about planning. I mean, unfortunately, the banks are document driven. You
Hmm.
Everything is about what you have on your documents. You can't tell them I have all this money sitting somewhere where there's nowhere to prove a document where you got the money, how you got the money, where is it generating. So
Yeah.
it's all document driven, and it all depends on how much they can lend you based on the income you're showing.
Yes.
So you got to plan. It's
And it's the net income.
and it's
So
the net income. Well, there's some add backs. You got the depreciation add backs. There's
yeah.
some other items that are add back. You need to sit with your accountant and you need to plan. And you need to sit with your banker, and everybody has to be on the same page. But it's basically understanding what kind of loan you want, how much money you want to borrow, and if your business or you can handle the mortgage payment. So it's about planning. It's about saving. And if you want a house today, you better have had a good income stream the last 2 years because
Yes, and it better be the net, or like you said, which is a big key point that I don't think a lot of self-employed people understand fully.
no.
And even some CPAs, I don't know why is it that they don't add depreciation enough for self-employed?
Well, a lot, you're dealing with taxes and you're dealing with the bank.
Hmm.
So banks have their structure of how they calculate what your debt to equity ratio is. They have their numbers stream. It's just how they calculate what they can lend you. The bank
Hmm.
um, work a certain way, and your accountant needs to understand how banks work
Hmm.
to make sure that your income is going to be enough to get that loan. And it's
Hmm.
not, like I said before, it's about planning ahead. Now, for
Yes.
the most part, banks look at 2 years worth of your because of I think what really hurt us the most when 2008, when the housing market crashed,
Hmm.
banks became more document driven.
Oh
They're
yes.
very diligent
Hmm.
on the information they obtain, and it's because I think it has to do with a lot what happened in 2008, where they weren't as diligent and they were giving out loans left to right, to people who couldn't afford it.
Oh yes, I
And then
remember I was a realtor at the time,
right,
and even
like
I was seeing these people getting these loans, and I'm like, but this person's not. It just
qualified,
doesn't. Their
just
income is like 2,000, and they're getting like a $4,000 loan. I'm like,
it
how
didn't
are they gonna pay it when it goes higher because it's adjustable? So
right.
it's only for a
Fixed
time.
rate. At the time, they were giving out these loans to people who couldn't afford it. They
Yeah.
would give them a fixed rate. They would give them a zero interest bearing loan, and then
Hmm.
it changed, or variable loan, and then in 4 years it would change to
Yeah.
a phenomenal amount that the individual mortgagee couldn't afford it, and the house that's it was a domino effect,
Uh-huh.
and that's when things.
Yes. No, it was terrible. It was a terrible thing. And then things just keep happening now with the COVID. A lot of guidelines have changed also.
Oh, I don't know that, but
So,
if you
yeah, a
have,
lot of guidelines have changed. It just takes something like that crash, or something like
you know,
redlining from a lot of banks, or something like COVID, to change these guidelines. So now they're very stringent, like what they use. Let's say, for instance, if you're looking to buy a multifamily, now they're using less of that income because of the COVID. A lot of people didn't pay the rent. So now they're using, where they used to use 75% of that, now they're using less, 56%.
so they're
So Yeah.
Okay. All right. I mean,
So that's another thing to keep in mind. But um, as a self-employed, you hit it right on the nail when you said the depreciation, and that's very important. That a lot of self-employed don't know that if they're in a business that they could take depreciation. If you're buying machinery, if you're buying things that depreciate with time, cars, um,
you're even the real estate, the business you're in, if you own it, it all adds up. What
computers, yeah, things like that, computer copiers.
even
uh,
um, even your car payment can help um, deal with your debt to equity ratio if
yeah.
business is paying for it. Even your insurance payment. Um, there's a lot of things that the bank adds back to your
Yes.
debt ratio. And I
Hmm.
keep saying income to debt ratio. And that's an important ratio because it's what the bank uses to determine, if you have enough income to not only pay the mortgage, but all your other debt. And
Yeah.
sometimes they make you pay off some of the credit cards just to make it there. So it is a numbers game.
Hmm.
But you need to have a ballpark of where you have to be in your net income or your net ratio. So, for example, let's say you made $50,000 in net profit. Well, that profit is going to get even bigger in terms of the ratio calculation if you have depreciation, if you have other items that can increase that ratio.
Hmm.
So, at the end of the day, like I said, if you anticipate to buy a house in the 500 and $600,000 market, or it all depends what you're borrowing too, because the bank is not going to lend you money beyond a certain amount that you can't afford. I mean, if the bank can clear you for maybe 300,000 and you want to buy a $500,000 house, you're going to have to
Oh, yeah. And they
different.
make sure they back it up. Like it's not just the taxes, but they do ask for when it's self-employed income, they do want to back it up with the statements, your bank statements.
It's very important. They look at it, they review it. If I am declaring your car expenses on your return, or they want to see that those car payments came out of your business account. So it's
Hmm.
not only about showing income, it's about organizing yourself where you are also reporting the correct expense under your business as a
Hmm.
personal. It's very hard to explain to a bank, oh no, the business pays for it, but the payment is coming out of your personal.
Yeah, you can mingle both. Like you can
You
you
have to be
can't mix them both. You have to keep them separated. So you always want to do business things from your business account and then have a
always.
personal.
And
Yeah.
it's that, with small business, it's a habit
Hmm.
that needs to be obtained by the owner. I have a lot of business, especially new ones that come in, that it's basically a mess because you got the personal account mixed with the business. Some of the expenses are coming out of the personal account,
Hmm.
and I really have to structure the client and teach them
Hmm.
that we gotta keep the business with the business. There's a way of taking the money out of the business into your personal account, but it's best to pay all the expenses that belongs to the business under the business and not under your personal. Only because if one day you want to take that loan, you
Hmm.
want to be structured in a organized manner where the
Hmm.
banker is going to be pleased with us, as opposed to putting yourself in a position that you're going to have to explain to yourself over and over again. No, this is for business. I use
Yeah, no, they won't take it. Like that's the
it. Just
problem. If
becomes a problem.
yeah, if you clear, if bank's not clear where that car payment is from, or the depreciation of the car, your payment came from the personal, but you're trying to take the depreciation as a business expense, that's not going to happen
No,
because it wasn't properly uh, structured.
no.
So if they can't make it that is separated, that it's your business paying for it, then they won't do it. There is a way that um, I know that if a business is less than 5 years, the bank requires 2 years. So just make sure that if your business is less than 5 years, they're going to require 2 years of tax returns and supporting documents with
Right.
that too. If the business has been more than 5 years, it could only do, you could only show one tax return, but you still have to back that up with your bank statements and other documentation.
So, I believe we did a client together just recently,
Yes.
and she was a bit of a mess, but with when she gave me her product, I was able to organize an entire year with financial statements where I was able to prove these questions that most bankers ask. But
Hmm.
sometimes it is a mess. I
Hmm.
had to prove that the distribution were true distributions and it all balanced out. And it's important that whoever your accountant is, you have a relationship and you plan and you speak. You cannot plan buying a house last minute if you don't
Yeah.
have income. If you want to buy a house in 2 years, make sure your taxes are looking good, your business is thriving. All of these things help get that mortgage, and especially
Yeah.
where interest rates are really, really phenomenal.
And she just happened, our client, the mutual client that we're talking about, she just happened to be able to support everything with documentation. So it went
It went
really
smooth.
well.
Still, there were questions, and we were able to back them up. So
Yes. Yeah.
if you have
So.
good books and you have a good accounting system, and I'm still teaching her how to keep things in the business, and she's learning, and
Hmm.
we're going through the process. But a lot of small business, because they're small, it's harder for them to keep things in one place because
Hmm.
there's a lot of moving parts, and it's just habits. I mean,
Hmm.
habit that the owner of that company needs to learn about, and they need to understand. A lot of them don't understand, small companies, why, what's the big deal.
Hmm.
And I said, well, it becomes a big deal when you want to borrow to buy
Yeah.
something, or you want to borrow money to expand your business. It becomes a big deal in that area because there are other moving parts. If you want money from a bank, there are rules and regulations and the way they do things. And if you want to get those advantages from a bank, then
Hmm.
you got to practice your business the right way.
And not just for qualification purposes, but you also, I mean, I'm a little guilty of that, but I'm Schedule C,
Y'all
which
are.
is a little a little different.
Y'all are.
Yeah, but not even for qualifying purposes, but even to guard yourself. Because if you're commingling your business with your personal, and something happens in your business, and somebody, in New York, everybody's suing everybody for whatever. Somebody decides to sue you for something, and there's not that separation between you and your business. Guess what? They're going to you as
Go
part
after
of the business because you are the business. So if you don't have that separation, to
you.
guard yourself, they could pierce the corporate veil and you're liable, you're on the hook. And
Yeah,
they, if
yeah,
you do have a house, they could take your house too.
everybody thinks, and that's where the LLC comes into plays, and corporation. You know, everyone thinks because they're an LLC, they're protected. And, you're protected to a certain extent.
Hmm.
And that's with everything. And corporations, you're protected to a certain extent. And it's
Yes.
true. If you start mingling to the point that your personal assets are part of the business, then in a lawsuit, your personal assets is part of the business and it's up for grabs. So
Yes.
you have to be very careful. And especially when you're dealing with, construction where people can get hurt, areas where the type of business can affect someone,
Hmm.
anything, and I say construction because every contractor is in jeopardy of something. Every time a tool is used, you never know. So
Hmm.
that's one of the areas. I'm not saying a simple cleaning services can't get hurt either. Any business. There's always insurance. I always say maintain your liability insurance. That's the first layer of protection. But if it's not enough, they're going to go after you. I was in a situation where I had an electrician, and unfortunately, he regretted really deeply. He lent his license and to a very well known other electrician, but he didn't. He had his license. It was just a moment. It was like a day. The guy died. He got electrocuted, and
Ooh, I know a friend. I wonder if it's the same person. I know a friend that.
but I don't know the person who passed away. But it's my client that got affected by losing his license, and things like this happen, and they can go after. He just got lucky that they went after the company where he died from, and not him, because he wasn't involved with the actual work that was being done.
Hmm.
But he could also have been attacked personally.
Yeah, he dodged a bullet there a little bit.
But he lost his license, so he really.
Yeah,
So
it's not worth it. So you
it's not.
definitely
It's
definitely have to be careful there
so
because
going back, people should just keep business and personal separated. Like I said, there are ways to take money out of the business
Mhm.
to bring to your personal account and then pay your personal expenses, either with small corporation, with distribution, or taking a payroll. There are other means, because people always say, well, the money is in the business. How do I get it out? And there are ways. You write yourself a check, you call it a distribution, you
You
write
have to pay yourself. That's another
a
thing.
salary.
You
Oh,
have to pay yourself. You have to pay yourself. Pay
absolutely.
yourself first. That's what they say in business.
Well,
But
yeah,
if you're not paying yourself and you're just grabbing money here and there, you don't have a clear picture of what your company's making, and we don't have a clear picture to say, okay, well, this is what he's making. He's making this much, and then he's getting K1s of this much, and this is the net, and this is depreciation, and we put all that together and create the qualification.
right.
But it's very
And
important.
paying yourself is another whole different ball game with small corporation. That is not even a bank issue. That's a tax issue.
Hmm.
With S corp, especially after a couple of years of starting a business, it is a must that a owner pays himself. I mean, what the first line on the S corp 1120S is officer salary.
Hmm.
The IRS wants, I mean, it is imperative that a officer pays himself a reasonable salary,
Yeah.
um, to avoid being audited. It's one of the major areas that gets audited in an S corp is the fact that the owner doesn't take a salary,
Hmm.
which, and it's called reasonable salary. They don't expect the entire income to be salary for the owner. They expect the owner to reasonably pay himself, because he's not working for free. And this is a for-profit business. It's not a hobby. So
Hmm.
they expect that the owner takes a salary and pays some of the self-employment tax. So, that's a whole different area. That's how to really file a good S corp return, where all the I's are dotted and T's are crossed, and
Hmm.
there's no room for being audited for it. But
Hmm.
that's one of the major area why S corps get audited.
Mm. And you've had clients getting, what was like your, give me like a terrible, I always go for like the terrible, one terrible story that you may have.
You know what? God, I have an ongoing client that he takes the entire drawer. He says, "Is my drawer still there?" I'm like, "Oh yeah." Usually I scan returns and I let it go, but he is an ongoing audit. The best thing was that um, I was able to save him $900,000 in taxes.
Wow.
That was like it was a good victory,
Nice.
but it was pulling teeth. He was very, very unorganized, so it's very hard for me to. It's a whole job. It's a year's worth of work.
Wow.
Getting an unorganized person who is being assessed $900,000 in tax,
Wow.
getting him down to 1,400. That was an amazing accomplishment, and it's just pulling third party information, getting.
Wow.
I mean, I told him, if you had been more organized, we wouldn't have to go through this.
Yeah.
I said it cost them some accounting fees. I said it wouldn't have to be this way if you start doing things in an organized fashion, and start, instead of being all over the place, get it,
Yeah.
get it. That was a huge accomplishment. And it's a process with the IRS. You can appeal. You get an audit letter,
Yeah.
you disagree, you have a right to appeal. I have a
Yeah.
tendency that and then if I don't disagree with them, I go all the way to tax court.
yeah.
And I find that that is my better chance. So I save a lot of my clients the concept of getting a tax attorney. I'm not an attorney, so usually if you go to tax court, it'd be good to have an attorney. But I tend to do the petition with the tax court. I tend to do everything and knowing that before anybody goes to tax court, there's an appeal auditor who wants to settle and get the case settled before, or resolve or go through any issues before we actually go to, in front of a judge. So I try to bring it to that point and get
Mm-hmm.
it resolved, saving my clients tax attorney fees because they're a little higher.
Mm-hmm.
And with him, that's what I did. And the auditor said, okay, we'll resolve it at this. And I was able to prove everything she wanted
Okay.
without a question. So, but it was, you know, digging and putting together things together, and it worked, but it was a lot of work. So
So
that
not being organized cost her.
that was a big nightmare. So save yourself some time. Even if you get audited, if you're organized, it'll be a smooth process.
Yeah, and don't be afraid of the IRS. I mean,
Um,
they're very approachable and they're,
and like I said, I mean, you can always say, I disagree. I want to go to the next one.
yeah.
You know,
They-
why not use all the tools that it's.
yeah. How many years have you been in practice?
Well, then I can tell you my age.
No, no, you don't have to say
Age
that.
me. I've been in practice over 25 years, I think.
Wow.
Yeah, I started as.
She knows everything in and out. So if you have any questions, definitely give her a call. She's,
Absolutely.
she's definitely very approachable
Oh,
and very professional.
yes, definitely. Don't be afraid. I don't bite.
So now, a tidbit for first-time home buyers,
Hmm.
like a big tidbit. Like, if you had to say one thing to a first-time home buyer, what would be? What would be?
Well, I would tell, it's a funny. I would say, you're in a different category. You have to think differently. You want to start writing off a lot of other things that you usually do and think twice.
Hmm.
One of the things I say, I every year, this time of year, I collect everything I don't use and I donate it.
Hmm.
It's a great write off. People don't believe it. Now, I'm hoping that the SALT tax will come back where people can really write off their entire real estate taxes. One of the things that the prior administration took away from us. I'm hoping we'll get that back because New
Hmm.
York and the tri-state area are very expensive with real estate tax.
Oh, and they're going up. Yeah,
And
they're
they
going.
go up, and we're only capped at 10 when a lot of us pay more than that combined with our work taxes, state taxes.
Hmm.
So, but all of that adds up. For the most part, you may itemize, and now you're like thinking, okay, what can be write off? One of the things is I give out like 15 bags at the end of the year of clothing, household goods, anything I don't use, I donate it to a charitable organization. Those are great write offs. So
Hmm.
always think that now that you're a homeowner, you're going to have real estate taxes, you're going to have interest. That's going to put you in a different category where
Yeah.
you can start writing off things. And I said, always contributions are great.
Yeah.
Those
Yeah.
are, and if you play the market and you're an investor, you're only allowed a $3,000 loss. So if you want to sell because the market is down and claim a loss, you can do that. Um, if you're a small business owner, I would say sometimes you want to push your tax liability to the following year, or if you have products that you need to buy in January, buy them in December.
Yeah.
Your
That's
tax.
another thing for people that are looking to invest and grow, because this channel is, we're starting with first time home buyers, but as we're growing, the audience is growing too. If you're looking to invest, you just have to make sure that your income covers your first and your second. Although the first we do what's called pity wash,
Mm-hmm.
where if you're getting rental income
Right.
off of it,
Right.
then that washes off the expenses. But you have to make sure
Oh, I think we got.
that there's 5% of the income, not even the whole income. 45% of the income covers for both of those properties, the one that you're going to buy and the one that you have, and also for your expenses on credit. So that's a very important thing, that you have to look into your credit. And I know self-employed, we put a lot of stuff on credit cards because, as we're getting money in and money's going out, you put a lot on credit. But if you are looking to purchase a house, make sure that utilization is under 10%,
Right.
so that you could use the most out of your income. um, definitely, if you are self-employed, you want to make sure you have great credit scores, because you'll get scrutinized a lot less by the banks.
Are going to be higher if you don't. So you may get the
Yes.
loan, but you're going to pay more for a less favorable credit score.
Yes.
You
And
know,
there's things, there's products that are 12 months bank statement products, no ratio products, but the interest rate, like you said, they're a lot higher. So if you're looking to, take advantage of the lower interest rate nowadays, you have to make sure, like Omaida said, plan ahead and speak to a professional. You could go to Omaida first and get revise your taxes, or you could come to me and I'll send you to her. Yeah. Either way, but you want to make sure that you speak to either an accountant or your loan officer. That would be the first stop before a realtor, before looking at houses, because the worst thing you want to do is waste anybody's time looking at houses and you're not ready and your taxes are not there.
and it's good to have an approval from the bank before you go
Mhm,
house hunting, because then you're wasting your time and the real estate agent's time, because
mhm,
you may find a house that you love, but no one's going to give you money on that house because you're not approved. So I always say, make sure you can get approved and know how much you can get approved for. So if the bank says you can only get approved for 400, well, if you're going to look for an $800,000 house, you got to make sure you have $400,000 in cash to make up the
mhm.
difference.
Yeah, yeah.
But other than that, the bank is not going to approve it. You're not going to have the money. You wasted your time and your real estate agent's time. So
Mhm,
smart, plan ahead, get that approval. Before you get the approval, make sure you have income to show.
mhm.
Doesn't matter if you have it underneath your mattress. You need to really,
Actually, it's not good to have it underneath your mattress, and I know a lot of self-employed
I mean, at
people do
least
that.
invest it.
At least have it in your bank for 3 months. Let it season in your bank, so you can show it. But anyway,
Anyway, yes,
Almaida, thank you so much. I appreciate you coming on the show and giving us all that.
a pleasure.
Yeah, the pleasure of your presence and all the details on how we could go about the tax returns when we're self-employed looking to buy a house. So I really appreciate. I knew it was going to be a great one, and I really appreciate your presence here today.
Okay.
Thank you so much.
Any,
And
I'm available.
and I'm sorry. Go ahead.
No, anyone that has any questions, feel free to call me. I'm available. It's a good time. This is one.
Yeah. And you could also go to her website. It's scrolling in the bottom there, www. No, who uses W anymore? But globaltax.info, not .com, .info.
At
516-558-0065. It's scrolling right there right now.
yeah,
It's so weird because this is like opposite. Um,
right.
so yeah, give her a call, get some good advice. Don't go to somebody who just started doing taxes the other day, because they're not going to do your taxes correctly. So make sure they have enough experience. And what's a piece of advice they would tell somebody on how to tell if their CPA is going to be good for them in that sense? Can they tell?
Well, it's the questions that are being asked of the client. I usually, not only do I see prior year's return, I go beyond that return. It's the understanding the question. It's the questioning of the client, understanding if it's an in and out operation where you just go in there to do a tax return and that's it, or you're actually having a consultation, and the tax individual is actually asking you questions about your business, how your financials are. The only way an accountant can understand your business is by asking you questions about it. They're not going to know
Oh, I
everything,
think.
and by having good financial statements. So you know every business should have a good income statement and a balance sheet, and that tax preparer or accountant needs to produce that. If they're not producing that, then how are they knowing how your business is doing? It's very hard.
Mhm.
So it could be just input your information and be done with it. Oh, have a nice day, this is your feed. Or it could be more entailed, where there's a dialogue between client and the tax accountant, and we are understanding your business, and we want more than that. You want growth, we have to plan. You want to buy a house, you got to plan.
Mm-hmm.
There has to be dialogue, and you get a feeling when you're with someone that is
Mm-hmm.
asking you questions and digging for information.
Mm-hmm.
It's just like, when you feel like you go to the doctor that sees you quickly, or the doctor that sits down with you and is really, thoroughly wants to know what's wrong with you.
Oh yeah, definitely.
So it's that.
It's not the same, like look at you and say, well, you have this thing, versus somebody who goes out of the way, gets blood work, sends you to do x-rays, sends you to do all this stuff, eliminates the process of elimination, and then tells you, okay, we have this, could be it, this or this, it could be it, we're gonna now,
Just like
narrow
doctors,
down.
they don't have all the answers. Just like accountants, we don't have all the answers. We have tools to get the answers. A good accountant will tell you, hey, no, I don't know what that answer is, but I will get back to you and give you a thorough explanation. Just
Mm-hmm.
recently, I had a dialogue with a tax attorney. I'm trying to, this young man just inherited a house, and he didn't know his mother owed so much taxes. So the IRS came after him and say, even though his grandmother's deceased and he inherited the house, you're
Mm-hmm.
responsible to pay her past due taxes.
Mm-hmm.
He didn't have money for representation. He didn't have money for taxes, but I guide him into how to speak with the IRS and
Mm-hmm.
cut some of those fees down. And I
Yeah.
was kind of like his walkie-talkie, like I was his earpiece, and I like so like
Yeah.
that. And he, we managed to knock down $40,000 out of the 100. So it's
Nice.
a big difference, but it's dialogue and understanding that you want someone who feels your pain and understands
Yes.
what you're going through, who's going to try their best to go all the way and give you the time.
Mm-hmm.
Other than that, I mean, I know with the accounting field, tax field, time is money because we don't have a product, we have services.
Yeah.
But you want someone that at the beginning is going to give you that diligent time because it's important.
Mm-hmm.
Yeah,
Definitely.
important to understand your situation.
And I have to say, Omaida is very professional. So I feel confident that you could give her a call. She's very good at what she does.
Yeah.
Omaida, if you guys have any questions, you could send us the questions. We could respond them later. You could reach her at globaltax.info. Call her at 516-558-0065. Um, or you could leave a comment and we'll get you the answer, okay? So it was a pleasure being with you guys tonight. And thank you so much, Omaida. This is Retalk TV for you guys. And looking forward to seeing you on our next interview.
It's been a pleasure. Have
Thank you.